Hi there and welcome to this installment of Week Ahead. Let's find out what's in store for the markets this week. I'm looking ahead with Peter Jarrett, Head of Division with OECD. So Peter, Bank of Japan released their monetary policy meeting minutes on Friday. They kept monetary policy unchanged at their last meeting on April 30th, but they did lower projections for core inflation rate and GDP growth. What can we expect from these minutes?
Well, I think that the minutes might reveal the bank's thinking as to why the government, and for that matter the consensus, are excessively optimistic for growth in fiscal 2015, because last week they at their meeting the bank reduced their growth only from 2.1% to 2%. For fiscal 2015, but the government set 1.4%. So I think the market and economists will be looking to see if there's anything that they've neglected. Similarly, on core inflation, they don't seem to have attributed much impact to oil prices for fiscal 2015. Because they still have the trajectory hitting the target of 2% in early 2016, and so they're on track, and so they're really laying out the case for no need for any further policy action. And so again, it'll be interesting to see if the minutes give good arguments for that case. Incoming data is pretty weak, although manufacturers expect that there was a big production rise in April. That rise may well have occurred, but it has to overcome the situation in the motor vehicle sector, where demand hasn't really kept pace with production increases, and stocks are therefore 23% above year-ago levels, and that's going to no doubt hold back production schedules.
UK elections are, of course, this week. What kind of impact do you think this event will have on the markets?
The big question really in the election, if you're trying to make some money out of it, is what the markets have already discounted. It looks like, because for some time now the pundits, the polling outfits have been predicting a hung parliament, and it looks like that's what surely must be discounted by the market. But the question is, does it matter if it's if there's a coalition led by the Conservatives or led by Labour? And I would think the answer is yes. A Conservative-led coalition might generate a relief rally in equities and sterling, but if it turns out that the Liberal Democrats, their coalition partners, get their way on having less austerity than the Conservatives would like, then bonds would probably weaken. Obviously, if it's a Labour-led government of any kind, I think you would see equities in the UK and sterling and bonds all weaken. But if by chance the Tories were to get a majority, then I would think you would probably see an amplified rally in equities and in sterling, but bonds would hold up better than they probably would do under any other scenario.
Finally, are there any events in particular that you think our viewers should watch out for this week? Yeah,
the beginning of the month always brings with it the U.S. employment report that's due out on Friday. Everybody knows that growth in the U.S. economy surprised to the downside in the first quarter, but more in GDP growth terms than in the labor market. The question is that just a question of lags? If there has been a fundamental loss of momentum in the U.S. economy, then that would certainly show up in hiring decisions, perhaps already in the April report that we're going to get. Most economists attribute a fair amount of the output weakness in the first quarter to the hard winter weather, mainly because low oil prices should have generated continuing strength in private consumption. But if the strong dollar is worrying firms, then they would no doubt hold off on hiring until and as if the dollar reverses course, which indeed it has begun in recent weeks. Over the medium term, markets would no doubt be looking at participation rates, because they've been trending down for a very long time now, and that indicates a slower rate of potential output growth and therefore of profits in the U.S. economy.
Peter Jarrett with me there. That's all for this week ahead. Thanks for tuning in, and be sure to keep clicking back.